Good afternoon. My name is Jenny Bai. I'm an associate professor of finance at the McDonough School of Business, also a research associate from the National Bureau of Economic Research. So before I joined in Georgetown, I was an economist at the Federal Reserve Bank of New York, so also has a background in the regulation. And during that time, my special field is in the fixed income market, in particular CDS and corporate bond. And as you can tell, most of my research in the credit risk. And over years, I benefited tremendously from the transparency and high quality of fixed income data provided by Finra. So today, it is my greatest honor to introduce Robert Cook, President and CEO of the Finra. Mr. Cook earned his have a rigorous trainings from a sequence of degrees. He got his bachelor degree from Harvard College and then a Master of Science from the London School of Economics. Finally, he earned his JD from Harvard Law School. After this rigorous trainings, he started a long journey dedicated to the regulation of security market. He first joined the office of Cleary, Gottlieb, Steen, and Hamilton LLP. There, during his private practice, Mr. Cook worked intensively on the broker-dealer regulation, advising large and small firms on a wide range of compliance matters. After that, he joined the Securities and Exchange Commission, and as the director of the Division of Trading and Markets, they are responsible for regulatory policy and oversight with respect to broker-dealers, security exchange markets, and clearing agency, and Finra. So it's natural smooth transition. He finally joined Finra as the CEO and president. So Mr. Cook, welcome. Thank you very much for joining us. Welcome to Georgetown.
Thank you, Jenny. Really great to be here today. And thank you, John. We have a strong affinity for you as well. And thank you, Rena and the rest of the team for including me once again in this conference. I'm really looking forward to the conversation.
Jenny, with that, I guess you're going to pass it over to me if that's okay. And thank you, Jenny. Robert, it's an honor to have you here. You obviously heard Jenny mention that Harvard University, Harvard Law, London School of Economics in between. I know you proudly wore your Harvard University, the Georgetown of the Northeast t-shirt during your tenure there, and I hope you still have it.
I wouldn't let it go, Guy. Great to see you. It's really a great honor to be with you today.
No, and it's exciting. And I just so you know, understand my love of Georgetown. I graduated in 1986, and currently all three of our children are students there. We have a sophomore, junior, and senior. So it's a place that's near and dear to my heart, and I'm honored to be doing this today. So thanks, Georgetown, for allowing me. And Robert, again, thank you for being here. So I want to get right into it. Shortly after taking over as the president and CEO of Finra, you announced an extraordinarily ambitious plan, self-evaluation, organizational initiative called Finra 360. Can you speak to that? Because I do think it's really important.
Well, sure, Guy, and thanks for raising that. So yes, let me step back and sort of put it in context. The purpose of Finra 360 was really to step back and ask a simple question, which is, how can we do our jobs better, right? We spend a lot of time as regulators thinking about how can we help the markets, how can we help the regulated entities, but implicit in the Finra 360 exercise was that we have an important public trust in our mission, and we really, in order to fully fulfill it, need to have a certain degree of humility about our approach and our opportunities for improvement. And so that's really what kicked off this initiative, was really to sort of step back and take a look at how can we do our jobs better. And this involved not just management sitting around the table talking to each other, but we really solicited input from our staff, and we solicited input from the world. We opened up a comment file, and we got a lot of comments, Guy, about things that we could do better, and we really welcome that. And so we really seized this opportunity to really conduct a lot of different changes within the organization. We've actually published a number of progress reports that are quite long. I'm not going to try to go through all of that, but I'll just mention a couple of areas I'm particularly pleased with in terms of progress we've made. I think we've really upped our game in terms of our engagement with the industry and other stakeholders, which is really vital to the SRO model, right? I mean, one of the key attributes of an SRO is that we really need to be, we have a lot of stakeholders and we really need to be constantly engaged with them. So we revisit our committees and various other ways of engaging with outsiders. And we've also provided a lot more transparency, I believe, about our operations, including our finances. You can't really have engagement if you don't have transparency, so people can see what it is you're doing and give you comment on it. We've also made a lot of significant structural changes within the organization over the last few years. And really the goal of this has been to help us conduct a more integrated, effective program across rulemaking, examination, and enforcement, and all the decision-making and processes that have to go into that. And really provided, I think have a much better platform now to build on in terms of those various functions. Our work isn't over, Guy. We got a lot. I think there's always opportunity for improvement, and I think that's kind of where FINRA 360 is going now, which is to really try to take this moment to build on what we've accomplished and really embed an ethos of continuous improvement into everything we do.
So, you know, it's interesting. I'm sure before you started at FINRA, you had some notions about what FINRA was. What have you learned? What were some of the misconceptions that you may have had or that you find that people may have about FINRA and what you guys and gals are trying to do there?
Well, first of all, I'd say I always knew, you know things and then you really know them, right? And I always knew FINRA was a public interest-focused organization. But boy, I have to tell you, when I joined, just working with the team here, they're so laser focused on the mission, right? Investor protection and market integrity. That really means a lot to people. We see that in our engagement surveys. We see it in how people behave here. So I think that piece of it was eye-opening for me. I think there's a lot of we do a lot of different things, and we're asked to do a lot of things. And I think that's one of the interesting parts about FINRA that some people don't know. A lot of people have a touch point in one area. People who focus on the fixed income markets might focus on our work there. People who focus on the equity markets might focus on our work there. We run an arbitration program. We run a registration system. We do examination, enforcement. So a lot of people have touch points into one slice of what we do, but stepping back and looking at the whole picture, we do a lot of different things, a lot of really important things. And I think that was another interesting thing. And I'll just mention a third one, Guy, which is technology. We've been working hard on improving our technology over the years. We migrated to the cloud early on, and the cloud migration, wave that's coming. We're virtually all in the cloud now, and that's what's permitted us to be able to process many, many billions of market events every day. But the FINRA is, I wouldn't call it a technology company because we're a regulator at heart. But the extent of our technology development and our ongoing investment in the future in advanced analytics and the like is really a part about FINRA that I think people might not appreciate.
Yeah, technology is fascinating to me, and we do a lot of time. We take a lot of time talking about the security of basically the different platforms. Can you speak to the importance of cybersecurity in your world? Because I'm sure that must come up, especially given the events of the last year or so, when you read so much about hackers and places being breached and those types of events.
Yeah, absolutely, Guy. I mean, it's really front and center all the time. So it kind of comes up in two ways for us. The first way is that as a regulator, we are have an interest in helping to promote high standards of cybersecurity in order to protect investors. And so we often are, certainly cybersecurity is part of the reviews we do of firms. Really here, though, I think what we're trying to do these days is to make sure that we are pushing out information to firms that would be helpful for them. A lot of the large firms, they got huge budgets, right, to invest in cybersecurity. But we have a lot of smaller firms, and trying to get them the information that would help them enhance their cybersecurity systems. We're all better off if we prevent something from happening, right, than coming in after the fact. And so this is something we all have to be focused on. The other lens through which we looked at this, of course, is our own cybersecurity. And I can tell you, we management, our audit, our external auditors and reviewers, our board, our audit committee spend a lot of time focused on cybersecurity. And it's one of those things, as you know, you're never done, right? Things are constant, threats are constantly evolving, and we're constantly evolving our efforts to make sure we're bringing forward best-in-class protections for the data that we hold.
Obviously, I don't need to rehash what's taken place over the last 8 or 9 months, but what have you learned about your organization and your ability to pivot from where you were probably a year ago to where we are now, given the fact that so much of work is virtual now?
Absolutely. Like every other organization, we've had to learn a lot about how to get our work done, but get it done in a different way. So I think I learned a couple of really good things about our organization. We pivoted very quickly, and that investment in technology that I was referring to earlier, that really enabled us to help empower our staff to work from home where they would be safe, but get the work done. The digital interaction with firms has evolved so much that we have been able to substantially continue our oversight of the securities industry without having to go on site. So that ability to adapt to not just to sort of things on our end, but to adapt to what's going on at the firms has been really important, right? Just as we were changing how our workforce is configured, the firms are doing that as well, with a lot of people working from home. And so I think there's a good story here altogether, Guy. I mean, if you think about the stress that's put on the system and on the firms, that from what I see, yeah, there are hiccups here and there, but there was a lot of work, hard work went into maintaining continuity of service to customers, to investors, and the plumbing of the markets held up really well. So I was pleased that Finra was able to make that pivot. Were we perfect? No. There are some areas where we realized that we could better reinforce our continuity procedures, just like every organization. I'll give you a quick example. People are coming into the industry, as you know, they got to take qualification exams. And when the testing centers shut down across the country for good reason, that inhibited the ability of some firms who were in a hiring mode to be able to bring on the new staff they needed to, for example, to meet the surge in call volume at their call centers. We quickly pivoted there with the help of our partners in the technology area, and with guidance from some of our advisory committees and working with some of the trade associations, to build an online platform to be able to administer those tests. So that's just an example where it wasn't as seamless as we would have liked, but we think we're better prepared for the future as a result of it.
No, that's a thoughtful answer, and I'll tell you. So I've been in the industry now, I think, better part of 34 years, and Finra, in my career, that's the gold standard of an SRO. But with that said, when you're at the top of the mountain, how do you stay relevant? So many changes. The changes taking place in the financial service industry seem to happen at light speed, and you have to adapt to that in a large degree. How do you find yourself? You addressed it in the initiative, I know, but how do you find yourselves staying relevant and staying the gold standard of the SRO space?
Well, I appreciate you saying that. I'll have to send you a box of chocolates or something for that. But look, I think the from my perspective, you never rest on your laurels, right? I was talking about it earlier, this need to focus on continuous improvement. And I think we have to recognize that the markets are continually evolving, right? The way services are delivered, the products that are delivered, they're constantly evolving. And so we do too. You either move forward or you fall behind, and we can't afford to fall behind. And if we're going to make sure we're protecting the markets and investors and working closely with the industry to do that. So I think there are a couple of things that come to mind for me here, besides just sort of a general idea of continuous improvement. First of all, I think we got to be constantly innovating in our approach. Got to be open to ideas that may not have made sense in the past, but now make sense. So open to new ideas about how to do our work, not just open to them, but actively look for them. So constantly evolving, thinking about where we've fallen short, how do we correct course? I think that's part of it. I think we've got a lot of expertise in Finra, but part of the SRO model is that you leverage the expertise of your membership. And so we constantly are engaging with our members to make sure we understand how these incredibly complicated markets are working. Where are there problems that need to be addressed? How could we work to make them better? Whether it's through, encouraging certain practices or writing a rule or providing a utility or whatever it is, we need to engage and leverage the expertise of our members. I think we also, frankly, have to constantly remind ourselves about our responsibility to act as good stewards of the public trust that's been placed in us. And I think that's part of the mission-driven culture I was referring to earlier. And then finally, I think we got to always be an effective collaborator. As an SRO, one of the differentiating characteristics is that ability to engage with the membership, but also other interested parties with the SEC, and make sure we're constantly enriching our thinking with the thinking of everyone else who has a stake in what we do. So those are some of the things I think about in terms of how do we make sure that we're constantly moving forward. And a lot of what we're focused on now in this context is how do we make sure that we're leveraging technology, building on technology, and focusing on the skills of our workforce to make sure that they're enabled to leverage technology to make sure we're doing our work even better.
Yeah, and that is an extraordinarily important point. And I encourage folks, Anna has been asking for questions, and you see me looking down from time to time. To the extent you have questions for Robert, please type them in. And Robert, here's a question, and I want to read this because it's a very specific question. And I don't want to mess it up, if you'll indulge me for a second. So Finra has recently begun implementing and monitoring compliance for the SEC's new regulation, Best Interest, BI, and the related Form CRS. How does the new best interest standard compare to the previous suitability standard? And, there's a lot around that. Are firms generally in compliance, or are people still learning to adapt?
Yeah, it's a great question, Guy, and thanks so much for passing that along. Let me start by just pointing out something that may seem obvious, but it's important to remember in terms of the overall context here, which is that Reg BI is an SEC rule, and what FINRA's job is to make sure that we're appropriately monitoring, examining, enforcing compliance with the SEC rule. But and we do that for lots of different rules. Whereas an SEC rule, we go back to them for how to interpret it. What does it mean? And then we use that information and we then apply that in the enforcement and examination programs. And we work very closely with the SEC to understand where there may be interpretive issues, when they're examining for compliance with Reg BI, as they do, that we're coordinating our approach to examinations and like. So there's really been a lot of close coordination with the SEC on this, but we're obviously the junior partner in that relationship and taking direction from them. Just to get back to this question then, so there are a number of aspects of Reg BI that I just would highlight. What's the difference between Reg BI and suitability? Well, Reg BI does incorporate a suitability standard, as does the Advisor Act fiduciary rule. Both of them incorporate a suitability standard. Reg BI does add some requirements, though, above and beyond the traditional FINRA suitability standards. So, for example, there is a focus on recommendations as to types of accounts. There's increased focus on consideration of costs and reasonably available alternatives when you're making a recommendation. And I should have said the obvious is that within Reg BI, there's this new obligation that imposes an explicit best interest standard. You can't put your interests ahead of your customers. And there are other aspects of Reg BI as well that are above and beyond what the world was like pre-Reg BI. There's more focus on conflicts of interest, disclosure, and compliance obligations. So those are some of the things I think about. And of course, there's a new Form CRS, which accompanies Reg BI, a new disclosure form that's provided to investors that's intended to spark a conversation between the advisor and the investor about things like, conflicts of interest, fees, services, and the like.
And I apologize. That was my junior daughter just bellowing in the background. So she's on her way out. So indulge me again, folks. And, so as I mentioned, I graduated in 1986, and that was sort of the heyday of the Big East. And there's going to be something behind this. But there were the big conferences, there were the major conferences, and they all seemed to have a voice at the NCAA table. And there were smaller conferences that always felt like they were being overlooked. And I think that's very similar in the financial services world, where some of the smaller broker dealers don't feel their voices are necessarily heard like some of the larger bulge bracket firms. Now, whether that's warranted or not is a conversation in and of itself, but it's out there. So how do you address some of the concerns or assuage some of the concerns that the smaller broker dealers might have vis-a-vis that, those issues specifically?
Yeah, it's a great question and a great interesting segue, of course. So look, 90% of our members are small firms as defined by Finra, which means 150 or fewer representatives at that firm. And many of those small firms are actually much smaller, like 10 people or less. So we have by entity a lot of small firms. That group constitutes about 10% of the overall individuals in our regulated area. So 90% of the firms, 10% of the individuals. So it's an interesting kind of framework to think about this question. Small firms do have a voice in Finra's governance. We do have a board that I report to that is majority public. That's part of ensuring that we're doing our public service. But there are industry elected seats on that board, and there are 3 seats that are elected by small firms. And there are other ways that we engage with the small firm community, including a small firm advisory committee, which also has elected members on it. But I just want to be clear that I think that it's the question you raised really important. Engagement with the small firms has been something very important to me. Small business is important to all of us, right? It's an engine of growth. It's where a lot of innovation comes from, and it's also sometimes a sector that can, in our world, service communities in regions or types of communities who may not otherwise be serviced. So sometimes they fill that niche. So they play an incredibly important role. They've also been subject to a lot of challenges, business challenges. There's been a lot of consolidation in the industry. There's a lot of compression of margins. You got zero commissions out there. So it's been a challenging environment for small firms for a lot of reasons that are well outside sometimes their control and Finra's control. But we can't let that be an excuse. I mean, my philosophy here is we have to constantly be looking at what can we do to help support the small firms. So in that Finra 360 exercise, we came up with a lot of ideas about what more we could be doing to help a flourishing, vibrant small firm community to continue to be part of our ecosystem. I do a roundtable about once a month with small firms to get their feedback, regularly engaging with our advisory committee. So some of the things we've done, we launched a small firm helpline. We've worked on pushing out more programming that's useful to small firms. We do a small firm conference call periodically to help them understand new developments. We focused on registration costs for small firms. A lot of stuff that sounds like in the weeds and very, very small stuff, but a lot of that can make a big difference to a small firm's ability to participate, to their understanding of what's going on out there, what they need to comply with. Anything we can do to help push out information to small firms is going to help them just deal with the compliance challenges that they can face. So it's something that we're continuing to, so we're open for business for new ideas about what more we can do to facilitate a vibrant small firm community. We've got more things in the work. There's a lot more that we've done than I've just mentioned here, but we're not, our job isn't done. And so we're looking forward to continuing to focus on this area.
So Robert, I have a question from one of our audience members, Mark Sheff. Hopefully I'm pronouncing that right. I apologize if I'm not, Mark, but so this is to you, Robert. And this sort of speaks to one of our earlier questions, but what is your evaluation of how remote arbitration hearings are going? Is the use of Zoom being embraced, shunned, or is it somewhere in between? And this is, I think, important. What happens to Zoom? What happens to virtual hearings after this pandemic obviously hopefully ends?
Well, thank you for that question, Mark. And good to hear you're out there. So just so people are aware, our arbitration hearings have traditionally been conducted in person. This is an arbitration hearing where third-party arbitrators, not Finra staff, hear disputes between an investor and a member firm, right, or between 2 member firms. And that's traditionally been done in person because of the pandemic and the public health concerns. we've been pushing back those hearing dates. So a lot of hearing dates have been pushed back as a result. Our rules do allow, however, though, if the parties agree to do an arbitration, or if the arbitrators order it, then it can go forward through Zoom. That's happened in the numbers are on our website. I think I don't remember the exact numbers, in a handful, more than a handful, but not a ton of cases. And I think the experience has been, we've been getting feedback on that. I think some people have been quite pleased with it. In some cases, surprisingly pleased with it. They feel like they've been able to move forward and get their cases heard, and frankly, in some cases without having to do as much by way of travel or bringing in experts from around the country or whatever it is. So there are some advantages there that people see. We always are working hard on making sure we got the training and people understand how to use the system, and that we educate people, and that we're monitoring to make sure that the forum is fair. We don't determine the outcomes. We're just trying to provide a fair forum. So, Mark, I don't know where it's going to go in the future for sure. We'll evaluate it based on what the feedback has been, I think, and what it continues to be. I think some people have said they would like to continue to have it be an option, but others probably would not. And we'll have to make a determination once we get our arms around what the future looks like, and how, what challenges there might be in the months ahead to being able to bring people back together in person.
And Robert, this is another question. This is about the Treasury market, and it's very specific. So again, if you forgive me, I'm just going to read, if that's okay, because I want to make sure I do it correctly. But following the October 15, 2014 flash crash in the Treasury market, the federal financial regulators asked Finra to expand its transaction reporting and compliance engines. That's called TRACE. System beyond corporate bonds to include treasuries. Trades in treasuries are now required to be reported to TRACE, and has brought much needed transparency to the regulators. And the question is, how helpful was TRACE for treasuries during the recent period of heightened market volatility? And there was incredible market volatility, historic in terms of the treasury market and obviously the bond market.
Yeah, that's a great question, Guy. I think this is a good example of the markets innovating and responding to a need, and really helping the regulatory community have a better sense for what's happening. As a result of this Trace for Treasuries reporting system that we were able to implement pretty quickly. And the feedback we've gotten has been very positive from the official sector with whom we share the data. It was positive when we started sharing the data, but especially during this time of very extreme volatility. The feedback has been it was very important to the public sector regulators in understanding what was going on and better informing policy decisions. So we're really pleased about that. I think the question was also asking about, probably what about sharing that information more broadly?
Transparency, always, right?
Yeah, transparency, and that's always a question that comes up for these sorts of regimes. So we have started publishing aggregate information and statistics that illustrate trading volume in the Treasury securities reported to TRACE. We work closely with the SEC and the Treasury Department to develop that, as we do with anything that it touches on the Trace for Treasuries program. I think we've gotten some good feedback that also has been very informative, not just to the public sector, but because we're making it public to the private sector, to investors and traders. Whether we provide more transparency, that's a challenging question. There are debates. That's a debate, right? And people can take different sides of that debate about when should we provide more transparency and what elements of the trades that are reported should be provided. What kind of exceptions do you have for block trades or what have you? What kind of delay is there? And so this is a question that we would anticipate taking guidance from the SEC and the Treasury Department and the Fed and others who are very focused on the liquidity of these markets. FINRA's not gonna go out there and make these decisions on its own, and we'll look for their guidance and input, as well as that of course, the investors and and traders. One element, a challenge to making the data that we already have public is, sorry, the data we've already collecting, the challenge of making that public is that not everyone is currently subject to this regime. Commercial banks who might trade treasuries are not reporting into Trace. And so you can imagine, if you're reporting into Trace and your information is made public, but theirs isn't, it doesn't feel like a level playing field. We're working on that. And that might be, a success on that might be a stepping stone to providing more transparency.
Yeah, and that was going to be my follow-up question in terms of that. There are always unintended consequences of things like this. So, do you see have you talked about the potential downside to publicly releasing some of this data?
Yeah, well, we've had a long a journey with Trace for many years where this question has come up. So even before we started collecting data on treasuries, right, we were doing it for corporate bonds. And Trace has expanded over the years to involve more and more of the fixed income world. And this latest iteration for treasuries is just that, just the latest iteration. And as we've been on this journey, there's been a constant debate about what to make public and not. And there are people who are concerned that making too much public crimps liquidity or may disincentivize people taking risk. If their positions are become known and they can be front run or whatever it is, there's that's one concern that we need to make sure we are being very sensitive to. There's also another view, which is that making this trading public helps enhance price discovery and enhance the information that's available to traders, might ultimately help investors to make sure they're getting better pricing. So it's a debate, and absolutely there are concerns that people voice. And our general bias as regulators has always been to provide more transparency, but we're also, at least in my mind, need to always remember the adage, do no harm. And so it's a cost-benefit analysis for sure.
No doubt. And it's funny, I do a lot of public speaking now. Obviously most of it's virtual, but when during the Q&A, this always comes up, and you probably sense, given a lot of the news over the last couple of months, this was going to come up. But this is a question from Annie, and she asks, I'm curious what Robert's view is of the future of regulation by the SEC, Finra, others for, you guessed it, cryptocurrencies. Well,
another great question. Look, we're very interested in this space from the perspective of our obligations to make sure our members are have the room to innovate and have that we as regulators understand the product, but also that we're making sure that investors are protected. So, crypto, it gets really technical really fast here, right? And so there's the currencies, but then there's the securities, and we regulate the securities. And on that front, we're really working very closely with the SEC, and really most of the issues that come up are things we need to look to them for guidance, whether it's what is a security, and then what types of, how do their customer protection rules and the like apply to the crypto securities, digital assets that are securities. So I think this is a space that's going to continue to evolve. I'm not going to predict about what direction and how quickly. We, I think, have learned a tremendous amount over the last year or two or three about this sector. We continue to see a lot of interest in it, and so I think we're going to continue to see member firms as we see today who want to apply to enter the industry and offer this type of product to investors, or existing members who want to offer a new type of product and where they need our approvals to do that. So it's an issue that we know there's a lot of interest in it, and we just got to continually strike that right balance, right, between fostering innovation, but also making sure we're protecting customers. And that's always going to be our where we put our thumbs on the scale.
Hey, Robert, a number of months have passed since, the tragic killings of George Floyd, Ahmaud Arbery, Breonna Taylor, and those situations, those incidents sparked a much needed debate, very difficult conversations about diversity, racism in all facets of life, but specifically in the financial services industry. And I think it was in September 16th, I read a wonderful article that, FINRA was going to address this and going to be at the forefront of it. And can you speak to exactly that? What are the initiatives? What is FINRA doing to address these concerns?
Yeah, really glad you asked this question, because it is such an important topic, long overdue in terms of focus. So our board issued a statement in June, it's on our website, that identified 3 areas that we want to focus on. And that's what management's been doing. And we've made really good progress. We formed what we call a racial justice task force that is people from all over the organization who are focused on this area. And there are 3 themes that we're exploring, right? The first is, how do we promote greater racial equity within FINRA itself? When I joined FINRA, I was delighted to see what a robust and energetic diversity inclusion program we had already been built here. And I thank my predecessor, Rick Ketchum, and others for supporting that. And we've helping to create a wonderful platform there. And I've been doing everything I can to help support it. So we've come in from a place where we've done a lot of work over the years, but we have more work to do. And so that's one area that we're focusing on, is what are the concrete steps we can take. Second area is, how can we work with the industry to make sure that it better reflects the nation as a whole. We're looking for opportunities to collaborate with the industry. We've hosted an annual diversity summit for a long time, which creates a forum where we bring together industry and other experts on how to promote more diversity. But we think there's an opportunity here for us to work more extensively with the industry in a collaborative way. We're not talking about regulating here. We're talking about how can we work together. And we got some specific ideas there that we're working through with some trade associations and other industry participants. And then the third area we're focused on is, how do we promote greater inclusivity within our communities? You think about like our Investor Education Foundation, we're making sure the programming there is focused on communities that may be traditionally underinvested, underserved, financial literacy and the like. So in a nutshell, Guy, those are the areas we're focused on.
No, and I appreciate that. And it's extraordinarily important. I appreciate you answering that. And this is actually a question from myself, if that's okay. Sure. I'm not a journalist. I don't pretend to be a journalist, but for the last 15 years, I've appeared on a show for CNBC. So my question to you is, what do you feel the responsibilities of the financial media are, given now that it seems so ubiquitous, so 24/7? In my opinion, there's a tremendous responsibility to our audience, but I'm sure you have conversations at FINRA about that. Do you have thoughts on that subject?
Well, it's funny you should ask, because I actually tend to be, I think, what some of my colleagues would call media shy. It's not a space I love to occupy, but it's part of my job. I think it's incredibly important what the media does, and it's important that we engage with the media to make sure they have accurate information. I learned so much from reading the media, but I think, and what's going on, new products, new trends, areas of concern, sometimes pieces that are quite critical of regulators, including us. I learn a lot from that. So I think it's important to make sure, as always the case, that the focus is on the facts and making sure that we're getting, because a lot of people, either their decision making and investing is influenced by what they're reading, or others are as well, and that's a tough job. It's a tough job. It's a complicated world, and it's a tough job making sure that that everything being reported is accurate. And that part of that is on us as regulators to make sure we're engaging with the media and sharing that with them information.
I appreciate that. And I think we may have time for one more question, if that's okay with you. And this is a really interesting question from Rama. To practice accounting, it's necessary to be a CPA, but anyone is welcome to effectively practice investments. And the question is, I find fascinating. Why can't FINRA and the CFA Institute work together and come up with a CPA-like requirement to practice investments? Is that interesting, or is that sort of outside your purview, do you think?
Well, look, I think we've focused extensively on how do we make sure that the people who are professionals advising others, right, are appropriately educated, qualified. That's that whole testing regime we run. And we're working on some really interesting enhancements to that testing regime. So I think that's an area where we will continue to work on, and happy to partner with others on how we make sure that the financial professionals who other people are trusting with their their nest eggs and their futures are appropriately qualified. The idea of it's also important to us that we push out information to the end investor as well, and we do a lot of investor education efforts. We got tons of material on our website, and we do a lot of programming, town halls and other things, and we work with a lot of other organizations to try to make sure that investors are have the information that will help them make informed investment decisions, including making sure that they're dealing with someone, if they're getting advice, dealing with someone who's appropriately registered and regulated for the services they're providing. And I think that's where our focus is on now, not making the end investor take a test, but making sure that we're doing everything we can to push out information that will be helpful to them.
Robert, in the last minute we have, you can only control your answers. You can't obviously control the questions, but there's a lot of times you walk away wishing you were able to say something or address something or just bring up a final point. In the last minute or so, do you want to leave our audience with anything?
Well, look, there's been a great conversation, Guy. I really appreciate it. We've covered a lot of ground, so I'm not sure there's anything that is burning on that front. I just hope people will take away the understanding that Finra is constantly trying to be better at what it does and is very open to feedback or suggestions about how we can do that. We want to engage with this community. This is a great community for us to engage with, as John mentioned up at the top, the independence of the Financial Markets Conference and Center. So I want people to leave with the understanding that the door's open. We're eager to engage and learn about your perspective. What do you think we should be focusing on? Where do you think we could be doing a better job?
Robert, thank you so much for being so thoughtful with your answers and so generous with your time. I know I appreciate it. I'm certain our audience does. I'm going to pass it over to John, but I also want to thank Georgetown University for allowing me to moderate this panel. It's been educational for me. Robert, thank you so much.